Welcome back. With the global stock markets that have suffered big losses today, driven by fears over the US economy and the situation in the Middle East, the Indian benchmark indices are also similarly trading down after an opening slump, with the benchmark indices Sensex and Nifty shedding nearly 3% each. Sensex and Nifty that have fallen for the second consecutive day, and the story which is also similar in a number of key other economies as well. For example, when it comes to Japan's stock market, that has also suffered its biggest fall in the last 35 years itself. As far as the trading, that has ended at 225, down by 12.4%, the worst single day result since Black Monday that was witnessed back in 1987. My colleague Hina is joining us from the newsroom to help us understand, Hina, what could be the possible factors that may have resulted in this fall.
Well, Amita, as you correctly mentioned, it is indeed a sea of red as far as stock markets across the world are concerned. Look at Sensex, where it is as we speak. It's down about 2.5%. It had even fallen down by about 3% earlier in the day. There has been a mild recovery. If you look at Nifty 50 at this point in time, even that's down about 2.61% at 24,072, barely holding around that crucial level of 24,000. Nikkei is also down about 12.4%. Now, the question that many are asking today is, what is behind this kind of a meltdown that we are seeing across stock markets? There are three important reasons why this is happening and why investors in India specifically have lost over 10 lakh crore rupees as far as Sensex and Nifty are concerned. Now, reason number one is that now there is a fear that the economy of United States of America might slip into recession. This is being said because on Friday, the unemployment data that came out at 4.3%, the slowdown that was indicated was much higher than what the analysts had anticipated. Reason number two is the policy cut that has happened, policy change that has happened as far as Bank of Japan is concerned, the rate hike that has happened in Japan, which is leading to appreciation of Japanese currency against the dollar by a significant percentage. So that's another reason. And reason number three is rise in the tensions in the Middle East. There is a concern that US has also raised that Israel may see some attacks by Iran and its allies in the next few weeks. And these are the reasons why markets are seeing this kind of a bloodbath on the Lal Street. We'll have to, of course, wait and see for how long this is going to continue. But today, definitely it's a Black Monday as far as the markets are concerned. Over to you.
Of course, when we talk about as far as the Japan Nikkei index as well, that has fallen by more than 3,500 points as well. And when it comes to the factors that are also being witnessed, when it comes to the markets here in India, we've been speaking to certain experts as well. Let's listen in. Hina, thank you very much for the moment.
This is on expected lines. Friday what we saw on the US markets, and this morning in Asian markets, US futures were down. So four major reasons are behind this, and this is on expected lines, this gap down opening. The immediate trigger is the Bank of Japan raising rates on Wednesday. What happens is there is something called a carry trade, where people and investors borrow money in yen and they invest in currencies and in markets across the world. Now, yen has strengthened more than 10% in the last 15 days, and that is causing a lot of unwinding of this carry trade across the world. It might be set for a recession in the next 12 months.
The share market is vulnerable and directly impacted by the international factors. Right now, whatever the correction we can see in our share market Sensex is because of the financial situation developed at US market, and we have some problem in the Japan also. So because our market is already over priced, or say is running on a very good price, so any impact in the international side is going to have a consequential bigger impact on our share market. This is what we can see.
Well, there are a variety of factors why financial assets are down. The selling today is just not restricted to India. It is global in nature, and it is restricted to all asset classes, including bonds, currency, gold, and even Bitcoin. Variety of factors are at play. In fact, it's a confluence of factors which are at play. In Japan, the yen carry trade has reversed. Globally, commodity prices have come down, and there is an increase in tension in Middle East. All these factors, when they've come together, they're having impact on the market mood, and in the short term that has led to a jump in market volatility. As a result, what we are seeing, like they say in financial markets, a risk of movement where everybody suddenly wants to take profits off the table. Our viewers must bear in mind that financial markets and especially stock markets have seen an extraordinary run up, and the correction was long overdue. So what